to specifically focus on Bitcoin Treasury companies, like this year, there's been a proliferation of them, right? And what are they? So what's the performance been like? And what are you actually comparing against? Well, in some ways, these are equities and they're publicly listed. So the comparison that most equity investors will be using is some kind of benchmark to the general equity market performance, like the MSCI. Now, you could just say, okay, how's the FTSE 100 performed? How's the ASX performed? How's the S&P 500 performed? What are the index tracking funds you can buy and do some kind of passive investment play? Or you might be a sound money advocate, but you're still fixed on gold as the solution. So you're looking at gold as a return. Or what I do, which is Bitcoin as a hurdle rate. In my opinion, owning Bitcoin in self-custody is the new risk-free rate of return. Now, the extraordinary thing about it is it's not a US government bond creating you a percent as a fixed income product each year that, if you actually calculate it effectively against the money printing, is net negative real yield. The real inflation rate is faster than the return you get on a bond. The Bitcoin hurdle rate is 30, 40, 50, 60% CAGR, depending on what time frame you've taken. So you need to find other assets that are going to potentially beat that. It's quite difficult, as we'll find out. But first of all, as I think of this as a portfolio, it's like, okay, you've got a few different tranches that you want to think about your net assets in. And, number one, cash, right? So you are likely to be sitting in some form of fiat currency, Aussie dollar, pounds, whatever it might be. Then it's cash flow. So, okay, what businesses do you own, or what strategies do you have in place to generate income with your capital? Then you've got a capital growth bucket, like how are you actually growing the purchasing power of your net wealth? And finally, people have a bracket similar to like a precious metals they might have had before, like a gold or whatever. Now, the interesting thing with Bitcoin specifically is it hurdles cash, like 24 hours, 365 days, it's liquid, but also very volatile short term, so up and down. So it absolutely smashes the capital growth bucket as well. And what I've tended to do is I actually just buy Bitcoin, hold, ride it for the capital growth, and as I need cash flow, sell down and pay the CGT. So that's one way of doing things, but perhaps you could allocate to something that's specifically a cash flow generating tool. And ultimately, it's like, okay, how do I make my money? How do I manage my money? How do I multiply my money? Shout out to Laura Tynan that came on the show that has that really nice framework. And so what is a Bitcoin Treasury company? Now, for me, they currently sit in a bracket, which is, okay, let's think about this for a second. It's capital growth, but within that subset, it's actually speculation. Like, to me, these are highly speculative bets. And I'm willing to make them with like a very, very small percentage of my net wealth, because if it does do a 10, 20, 30x, happy days. If it disappears, well, what's the downside? It's a small percentage of your allocation. Meantime, I like a large allocation to Bitcoin, which with a CAGR of 40%, 50%, it's just crunching away for you in the background from a wealth growth tool. It's unbelievable. What did I actually do about this? Well, I took a position in a company called Matador, so the stock ticker MATA, and I got in at the pre-IPO price, which was 50 cents Canadian. And what's happened over the last 9 months has been very, very interesting. At one stage, I was going, oh God, I'm really pleased with that Bitcoin Treasury company I bought. I'm 3-4x my money. But the mindset I had on entry was like, this is speculative, kind of like an early stage angel investment in a way, but it's always liquid. So I saw it as less risky, which was great. But it was like, this is a 5 to 10 year hold for me. Like it's like, maybe this goes to the moon, maybe it doesn't. And that's okay. But what you'll find out through this episode is my thinking's really evolving as to what these companies actually represent. And today, you can now buy MATA at less than what I paid in December. Now, the question is that a good price? And price and value are very different things. Like the concept of investing in lines, not dots, is something I like to talk about. So the initial data point, the initial entry point was, okay, what was the team doing in December? What was the stock price in December? What progress has been made since? It's like, okay, well, there's been a product that they've released. I don't really love the idea of like getting gold on the blockchain. Like, just use Bitcoin for what it actually is. and they've accumulated some Bitcoin. So okay, that's interesting. I really liked the founding team because of their banking background and their capital markets background. I didn't love it so much because of the kind of crypto lens. So am I happy with the performance? Well, not really, because Matador 21% down from the price I paid. Shit. Okay, well, that's not quite the headline you might have heard a couple of months ago about how amazing these treasury companies are. What does that really mean? It's like, okay, well, for me, I'm going to hold it and see what happens. Should I be buying more? Because that's a decision I could make. Like if I thought 50 cents a share was good value and it's now 21% below that, then why am I not adding to the position? And thus far, my thought process is simple. It's like you made a small allocation as a speculative bet, something long term. So just let it run, let it do its thing. But maybe I'm missing a trick. Maybe I should have exited at the 3 or 4x. Maybe I should be paying closer attention to this and monitoring it much more and using my time and building some kind of system. And so maybe in the future, I should implement some kind of sell side strategy where it's like, okay, if you buy a Bitcoin Treasury Co. and it does a certain multiple, just get out. Like it's a speculative position, 3, 4x. If you've beaten the Bitcoin hurdle rate, be happy with that, pay your CGT and get out of the position. And that's where these Bitcoin Treasury companies are interesting because to me, that's pure speculation. It's like trading an altcoin. I don't want to own Solana for 10 years. Like, forget it. And I don't play any altcoin trading games at all. But I do have some friends that play in that space and some have done very well. I would argue that it's going to be much harder to do that going forwards, but who knows? I mentioned the 21% down. That's hopeless. And Bitcoin from 20 December last year through to spot market today, 12% up. Wow. Well, that business has really got a lot of work to do now to get back up and over that Bitcoin hurdle rate. And for that reason, like this is that classic concept, like action leads to clarity. Take some risk, get some skin in the game, and make a bet and see what happens. And you learn so much as you go along, right?